Welcome. You've sent over a really interesting batch of documents on Tisco Financial Group.
That's right. We've got the notice for their 2025 annual general meeting, a recent piece from Bangkok Insight, Tisco's own Q1 2025 earnings report, and then their management discussion digging into those Q1 numbers.
Okay, so for this deep dive, the plan is, well, not just to read through them, but to really pull out the crucial insights. What you need to know to get a clear picture of Tisco's financial health right now, their dividend plans, and, the wider economic stuff impacting them.
Exactly. We're basically trying to answer, what's the core story these sources tell us about Tisco's finances, its dividend approach, and the economic scene it's navigating this year?
Great. Let's start then with that AGM notice. It's dated March 20th, 2025, and sets the meeting for April 18th in Bangkok, a hybrid meeting, actually. What really stands out, I think, is the agenda, especially the voting items.
Absolutely. The approval of the 2024 financials, that's always foundational. It gives us that look back at the past year's performance.
Right. And the notice lays out the key numbers for 2024 in millions of baht. Consolidated, so the whole group, total assets, 281,877, liabilities, 230,832, equity, 43,045, and net profit attributable to the company was 6,901 million baht.
Which works out to earnings per share of 8.62 baht on that consolidated basis.
Yeah.
The separate company figures are a bit lower, as you'd expect.
And importantly, it notes the auditor and the audit committee both signed off saying the statements are accurate, so confidence in those numbers.
Yeah, that's key, which naturally leads into the next big item for investors, the dividend. The agenda included acknowledging the interim dividend already paid and then voting on the final one for 2024.
Exactly. The consolidated net profit for 2024 was just over 6.9 billion baht. Though, interestingly, they do point out it's down a bit from 2023.
A slight decrease.
Yeah.
But despite that, the proposed final dividend is pretty substantial. 5.75 baht per share. That's for both common and preferred shareholders, totaling, about 4.6 billion baht?
That's a big chunk going back to shareholders.
It really is. And remember, they already paid out 2.00 baht per share as an interim dividend back in September 24.
Ah, right. So adding those up.
You get a total dividend for 2024 of 7.75 baht per share. And get this, that represents almost 90%, 89.9% of their consolidated net profit.
Wow, 89.9%. That really underscores their reputation, doesn't it? Prioritizing shareholder returns.
Definitely. The notice also gives the practical dates. Record date, April 28th, 2025, and payment date, May 16th, 2025.
And it clarifies the tax situation paid from profits already taxed at 20%, and individual shareholders can claim tax credits. Useful details for investors.
There's also a note about allocating 900 million baht from retained earnings into capital funds. This is basically following Bank of Thailand guidelines for consolidated supervision.
So strengthening their capital base.
Yeah, essentially beefing up their reserves. Always a prudent move for a bank. Gives them a stronger financial cushion.
Okay. Moving down the agenda, we see the standard item about appointing auditors for 2025. Ernst & Young was proposed again.
Right, with specific individuals named, though it's all subject to Bank of Thailand approval, of course. And they set a cap on the total audit fees for 2025, just under 11.4 million baht for the company and its subsidiaries combined. Standard governance stuff.
Yep. And finally, the AGM touched on the board structure, confirming the minimum size, residency requirements, number of Thai nationals, all per the legal requirements.
And the election process, electing the whole board at once using cumulative voting. That method can give minority shareholders a bit more say.
So overall, the AGM notice lays out some important housekeeping and decisions, but the clear headline is that very significant dividend payout suggests a solid 2024, even if slightly down from the year before.
Okay, now let's pivot to that Bangkok Insight article from April. The title itself is telling. Tisco. Dividend Darling, 2025. That nickname says a lot.
It really does. The article jumps right in talking about Tisco's rep for high dividends, usually 7-8% yield, paid twice a year, makes them popular, especially around dividend time in April.
Yeah, and it confirms that 5.75 baht final dividend for 2024 we just talked about, noting the ex-dividend date was April 25th. That's the cutoff date, to be eligible for the payment.
But the article goes beyond just the dividend, right? It digs into their actual Q1 2025 performance.
It does. And here's where it gets interesting. The net profit for Q1 2025 came in at 1,643.38 million baht. Still profitable, obviously, but that's down 5% from Q1 last year.
And down from the previous quarter, too.
Yeah, down 3% quarter-to-quarter as well. So a bit of a slowdown in profit momentum.
Why the dip? What did Bangkok Insight say?
Well, they point mainly to lower net interest income. That's the core banking profit driver. the spread between loan income and deposit costs.
And that was squeezed because...
Two main things, according to the article. First, the Bank of Thailand cut its policy rate in February, which tends to push loan rates down. Second, Tisco's own initiative, the You Fight We Help program, involved lowering rates for vulnerable borrowers.
So, a mix of macro policy and their own customer support impacting the bottom line. Makes sense.
The article also mentions their credit costs ticked up to 0.7% of average loans in Q1. That's the provision for potential bad debts.
Why did that go up?
Bangkok Insight suggests it was partly to support growth in higher yield loans, which can sometimes carry a bit more risk. So that increase put some pressure on the Q1 profit figure. It's always a balancing act.
Okay, but it wasn't all negative, right? What about non-interest income?
Right, that was a bright spot. Non-interest income fees basically was actually up 3.4% year on year.
Where did that growth come from?
Mostly from asset management fees, which were up over 10%, and also securities trading fees. Tisco Securities apparently gained some market share. Plus, they had higher gains on certain investments, these FVTPL assets.
FVTPL.
Financial assets at fair value through profit or loss. Basically, investments where value changes hit the income statement directly.
Got it. So the capital markets-related businesses seem to be doing well.
Yeah, providing a bit of diversification. But on the flip side, the article notes their commercial banking side felt the pinch from the weak domestic car market. Lower car sales meant lower insurance brokerage fees, since a lot of their business is linked to auto finance.
Shows how exposed they are to the auto sector.
Definitely. The article also touches on loan growth and asset quality. It flags that Tisco management, in an analyst meeting mid-April, signaled they expect lower loan growth for the full year 2025 than they initially targeted.
Lower than the original 0.5% target. Why the caution?
Concerns about the overall Thai economy, uncertainty about potential trade taxes, and also they tightened lending standards by reducing loan-to-value, or LTV, ratios for higher purchase and auto title loans.
Lower LTV means bigger down payments, less risk for them.
Exactly. But interestingly, despite that caution, management apparently expects the full-year credit costs to actually come in lower than their previous guidance of 120 basis points.
Lower provisions even with a weak economy. How come?
They attribute it to that You Fight We Help program, effectively restructuring debt, and also their stricter lending policies overall. The article mentions 4.3 billion baht registered under the HELP program, with a good chunk restructured in Q1.
So helping borrowers also helps manage their own credit costs, even if it lowers the yield on those loans temporarily.
Seems to be the strategy, being proactive with borrowers facing issues to prevent loans going bad later.
Okay, what about the stock itself? How are analysts seeing it, according to Bangkok Insight?
Well, there's a bit of a split view. Asia Plus Securities has a neutral rating. Their target price of 102 baht doesn't suggest much upside from where the stock was trading.
But they like the dividend.
Yeah, they highlight the attractive dividend yield around 7.8% as a key support for the price, at least up until the ex-dividend date. So for income investors, it's still appealing.
And the other view?
Bohwang Securities has a sell rating with a lower target price of 90 down.
Why so bearish?
Their argument is based on valuation. They think Tisco looks expensive compared to the banking sector average on metrics like price to earnings, PER, price to book, PBV, and how that relates to its return on equity, ROE.
So they feel the price is too high given its profitability and book value compared to peers.
Essentially, yes. They calculate a PBV ROE ratio that looks high for Tisco compared to the sector average. Bohwang actually prefers other Thai banks like BBL and KTB right now.
Interesting. So one analyst says hold for the dividend, the other says sell on valuation. Clearly different takes for you to consider.
Okay, let's move to Tisco's own Q1 2025 earnings release from April 17th. This is their official take on the quarter.
And the headline profit number matches what Bangkok Insight reported?
Yes, that 1,643 million baht net profit, down 5.2% year-on-year. No surprises there.
And the reasons they give are also consistent.
Pretty much. They confirmed the lower interest income due to the rate cut and the HELP program, the sluggish car market hitting higher purchase and insurance fees, and that increase in provisions for expected credit losses, the 0.7% of average loans figure.
But they also highlight the positives, I assume.
They do. They emphasize the continued strong growth in asset management and the market share gains in securities brokerage. Those are the clear, bright spots in the quarter.
And what about their overall strategy?
They stress cautious growth, effective risk management, cost control, using technology, and importantly, closely monitoring and assisting those vulnerable customers through debt restructuring and the You Fight We Help program.
Now, didn't the release mention something about their credit rating?
Ah, yes, that's a key point. They announced that TRIS rating upgraded them. Tisco Financial Group went up to A from A, and Tisco Bank went to A plus from A, both with a stable outlook.
That sounds like a significant vote of confidence.
It is. TRIS cited their strong financials, stable profits, flexibility in retail lending, responsiveness to the market, prudent lending, and strong capital. It's a positive signal about their underlying financial health.
Definitely something to weigh against those valuation concerns from Bulong. What other numbers did the release give? Loan portfolio.
End of March, total loans stood at 231,190 million baht. That was actually down slightly, 0.4% from the end of 2024, mainly due to fewer new auto hire purchase and SME loans.
And asset quality, NPLs.
The non-performing loan ratio was 2.4% of total loans, which is, reasonably contained. And importantly, their NPL coverage ratio was strong at 153.8%.
Meaning they have reserves set aside worth over 1.5 times the value of those bad loans.
Exactly. A solid buffer. And finally, they reiterated their strong capital position. Tisco Bank's BIS ratio was 20.7%, Tier 1 at 18.9%, well above regulatory minimums.
So well-capitalized, good coverage, even if loan growth and profits dipped slightly in Q1.
That seems to be the picture from the earnings release. Resilience and caution seem to be the keywords.
All right, our final source, the Q1 2025 Management Discussion and Analysis, or MD&A. This should give us more context in management's perspective, right?
Precisely. This is where they really explain the why behind the numbers. It kicks off with their view of the Q1 economic landscape.
This is their take.
They note the overall slow economic growth. Tourism and exports were growing, but trade risks linger. Government spending picked up, but private investment was slower. Consumer spending improved only slightly, helped by stimulus, but held back by cost of living concerns and worries about U.S. trade policy and geopolitics.
And they specifically mentioned the weak car sales, too.
Yes, down 9.5% year-on-year in Jan-Feb, which directly impacts their business. They also flagged the Bank of Thailand's rate cut to 2.00% and the resulting drop in commercial bank loan rates. And the volatile stock market, the asset index dropping significantly.
So a pretty challenging backdrop they're painting.
Yeah, definitely some headwinds. They do, however, re-highlight the TRIS rating upgrades as a key positive development in the quarter.
Okay, digging into their performance analysis.
They reiterate the Q1 net profit of 1,643 million baht, down 5.2% year-on-year and 3.4% quarter-on-quarter. And again, they stress the lower net interest income due to the rate cut and the You Fight We Help program.
Does the MD&A give more detail on that net interest income?
It does. It explains the drop was mainly from lower loan yields because of rate cuts and assistance measures. But importantly, their cost of funds also went down. The net result was a net interest margin, or INM, of 4.88%.
INM of 4.88%. How does that compare?
It's still a relatively healthy margin for a bank, though likely compressed compared to previous periods due to the factors mentioned.
What about non-interest income in the MD&A?
Similar story to the earnings release. Growth in asset management and securities brokerage helped offset weaker commercial banking fees, especially insurance linked to auto loans. They also note operating expenses were down year-on-year and quarter-on-quarter thanks to cost control.
But the credit loss provisions were up.
Yes. Expected credit loss, ECL, increased to that 0.7% of average loans. They frame this as a prudent measure given the economic uncertainty.
And their balance sheet. Assets. Loans.
Total assets grew slightly, mainly due to changes in investments, while loans decreased marginally, as did interbank placements. The loan decrease came from retail and SME segments.
Anything specific on the loan types?
They mentioned they actually increased their penetration rate, their success rate in new car hire purchase, even though the overall market shrank. Suggests they might be gaining share there. But they were more cautious with their Somwang and Gurin Sangdai auto cash loans.
And more details on the You Fight We Help program.
Yeah, they give some numbers. About 13.7 billion baht in loans were eligible, 4.3 billion registered for help, and 2.6 billion were already restructured by the end of Q1. Shows the scale of that effort.
Okay, asset quality again, NPLs.
Confirmed the slight rise in the NPL amount to 5,591 million baht, pushing the ratio up marginally to 2.42%. But again, they emphasize the strong coverage ratio of 153.8%. They also break down NPLs by loan type in the MD&A.
How about funding? Deposits?
Total funding down slightly. Deposits were fairly stable, but they reduced their outstanding debentures quite a bit. Their liquidity coverage ratio, LCR, remains very comfortable at 161.2%.
So plenty of liquidity. What about the other businesses? Securities, asset management?
For securities, Tisco's securities saw higher average daily trading value despite market volatility, suggesting more client activity or market share gains. In asset management, assets under management, AUM, dipped slightly to around 399 billion baht, but fee income grew. They provide market share data and AUM breakdowns too.
And finally, risk management and capital.
They reiterate the strong capital position. Their internal assessment shows capital well above minimums, and they list the specific BIS ratios again for the group, 18.8%, and the bank, 20.7%, confirming they're comfortably capitalized and have good liquidity. So yeah, the MD&A really provides that deeper layer of explanation, connecting the results to the economic context and their strategic responses.
Okay, so let's try and wrap this up. Pulling everything together from these sources, what are the key takeaways for you, the listener? First, Tisco proposed a very hefty final dividend for 2024, living up to its dividend darling reputation.
But second, their Q1 2025 profit did dip slightly. That seems largely down to interest rate headwinds and their cautious stance on lending in a slow economy, plus the cost of helping borrowers.
On the plus side, though, their asset management and securities businesses showed good momentum, providing some offset.
Absolutely. And third, you've got those contrasting analyst views to consider. The dividend yield is undeniably attractive, but some analysts worry about the stock's valuation and growth outlook. That TREAS rating upgrade, though, does suggest underlying financial strength.
So our goal here was really to synthesize all this, the AGM notice, the news analysis, Tisco's own reports, to give you a solid, multifaceted view of where Tisco stands right now and what's shaping its near-term future.
Which really leads to the final thought for you to ponder. Given these economic challenges, the slow growth, the rate cuts, and Tisco's response, the caution, the customer support relying on fee income, what do you think will be the key factors driving their performance through the rest of 2025 and looking further out?
And maybe more specifically, considering that slight profit dip and the cautious outlook, how sustainable is that very high dividend payout policy in the longer term? What questions does that raise for you about their strategy going forward?